Hi there, good morning. You've tuned into Buy Now, Sell Now. This is on E Now. I'm Cheryl D'Souza. Along with me is Somit Sarkar. A very good morning to you, Somit. And before we move on and talk about what the markets are doing at this point in time, it is definitely a record high level coming in for the benchmark. But remember, India is a land of many cultures and traditions, and the same holds true for its festivals and rituals as well. Hindu New Year is being celebrated today under various names across the states, while it's Gudi Padwa in Maharashtra. The states in the North India are celebrating Chaitra Navratri, while Karnataka and Andhra Pradesh are celebrating Ugadi. So despite that, many different names, the essence of welcoming the Navvarsh remains the same, filled with prayers, rituals and festivities. So from all of us here at ET Now and the team Buy Now, Sell Now, we wish you all a prosperous new year. And talking about prosperous New Year's, definitely that's the way how the markets are actually panning out right now, given the fact that we've scaled 22,700 on the Nifty, hitting fresh record high levels for the Nifty, as well as on Sensex. We've scaled 75,000 mark as well. So a great day coming in for the benchmark indices. You have broader markets also lending that support for the benchmarks as of now. Let's take a look at what individual stock names are doing. Take a look at what Axis Bank is doing in trade. There was a huge bulk deal that took place. We expect that to actually happen, and 1.1% equity changed hand via block deals. That one is trading higher by about 1% gains or so. The other one is Gland Pharma. A huge block deal of in excess of about 5% equity took place in that particular counter. That one is sulking under pressure. Apart from that, Infosys, Hindalco, Tata Steel, ICICI Bank are the top gainers on the Nifty. While on the loser of the market, you have Hero MotoCorp, Eicher Motor, BPCL among the set of losers right now. Talking about the sectoral indices and the sector wise, if you look at it, is the auto sector that's under pressure. Pharma, FMCG seeing slight bit of a red on the screen, while on the gaining end, it is metal, IT, realty, as well as the private sector banks. So that's the way how the markets are panning out right now. Somit, definitely a great day coming in for select pockets of the market. FMCG, no doubt, under pressure, a tad bit under pressure in trade today. But
in fact, has been under pressure for on a YTD basis. If you see, it's the one of the top loser sectoral wise. If you see, it's down around 5.5 odd %. And hence, on today's edition of bnsn Lens, will zoom in on what the FMCG sector is doing, and more importantly, what's the road ahead for the sector. First up, let's hear out the word coming in from Sunil Duggal, the former CEO of Dapper, on the growth roadmap he's seeing for the year when it comes to the FMCG space.
We do expect growth to be in the low to mid single digits in the first half of the year, even though there are some tailwinds with regard to a good Rabi crop, etc. But overall, the demand situation remains muted. And the second half is what I think we can look at to perhaps fuel some growth, predicated on a good monsoon and therefore a good Kharif output. And perhaps also on the back of a low base, so optically we get the illusion of better growth. My concern going forward is not so much on the top line, but on the margins. Now, we've had a fairly benign margin environment over the last few years on the back of a low base and fairly decent inflation lines, but not to be taken as a given. We already seen inflation creep up in some key raw materials, and this could in the event of any disruption in the Middle East, external triggers like that, or internal issues like poor monsoon.
All right, then moving on. It's summer, and that is proving to be a magic wand for some categories. Definitely not for us out here when you talk about ones who are sweating it out in the sun. But we also caught up with Akshay D'Souza, who is the Chief of Growth and Insights Advisor, into what he had to say about the summer panacea for the sector and roadmap for rural recovery.
An early summer has come in. I think is definitely going to be positive for a lot of categories. However, there is definitely a headwind from a confectionery and chocolate space where cocoa prices have soared. I think you see a lot of price hikes there. But across most other discretionary products, we are seeing an active participation of brands in trying to even correct prices so that they drive consumption. So I think rural, don't write off rural anywhere. I think it's just a season from getting back into action.
Well, don't about the rural recovery. That's the word coming in on the rural demand. Now let's scratch a point further and hear out comments from Abneesh Roy, the Executive Director of Nuvama Institutional Equities, as well as on the rural recovery and price hikes for the sector going forward.
Recovery is still awaited. My sense is in FY25, with a normal monsoon forecast and local players competition getting anniversarized, I would say that recovery can potentially start from Q2 by 25 because of the gross margin pressure coming back. Consumer companies will take a price hike. We have already seen in cocoa and coffee, a lot of players thinking of price hike. They have already taken. So that will also aid the overall revenue recovery, which has been very muted for the sector, especially in rural, for the last 1 year.
All right, so that was the complete picture when it comes to the FMCG sector, right from the key trends to what the roadmap for the growth and in rural recovery is looking like. So then let's take the conversation forward with our guests to see what are their top picks as well as what their views are coming in on the FMCG sector. We are joined by Kush Bohra on the technicals, while on the fundamentals, we are joined by Rajesh Agarwal. A very good morning to you as well as Rajesh. Thank you so much for joining us on ET Now. And Rajesh, coming to you first, we've had a slew of FMCG counters actually report their Q4 updates. While some were good, some were not that good in particular sense. Some of them definitely indicating there is some sort of a recovery creeping in for the rural sector. And also you heard what the guests had to say. What's your take coming in for the FMCG space? Are you gung about the space? No doubt. Like Somit said, YTD, the index hasn't done anything.
Good morning, Cheryl. Good morning, Somilo. Good morning, Kush. I heard our three guests, they were talking about, including Dugal of Dabar. But we have our views that last 4-5 quarters has been pretty bad for FMCG companies because of demand not picking up. But going forward in the next second quarter onward, we feel that it's just a matter of time that the demand picks up because of various reasons. One, micro indicators are there, expectation of a good monsoon and Rabi. And not to forget that input prices have gone down for some companies, and that might help in increasing the margin. Last few quarters, of course, rural demand was bad, but we have entered into election phase, and we all know when elections come, the rural spending goes up because of the inflows. So we feel that in first quarter onwards, high single-digit volume growth could be possible, and with fall in input prices, the likelihood of good numbers is pretty much there. So from first quarter onwards, or maybe in the max second quarter onwards, we are positive on the sector as such. And if we talk of stock picks from this sector, you know very well, ITC would be my first choice. That has been there from the likes of 150 odd rupees, and it's almost twice that price. But still, we believe that ITC, having a strong balance sheet, aggressive portfolio, debt-free company, good dividend, I think this stock can still be accumulated for a longer term horizon. And the other one will be Varun Beverages Limited, not only because of the rural demand, but because of the kind of heat which has been predicted in the near future. So, and Varun Beverages is one of the largest PepsiCo manufacturer outside the US. Almost 90% of Pepsi sales in India is being done by Varun. They have taken over a company in Africa, and that's again going to add to the numbers. I think these two companies should be kept in a portfolio.
Well, and Kush, what's your view? How is the Nifty FMCG index looking? I believe it's trading below its 50 and 100, and a couple of stocks like HUL and Dabur are near the oversold territory right now, current.
Sure, Sumit. First, a very good morning to all of you. Well, you're right. The index is trading, close to its certain key averages, certain, even below the 50-day moving average. But there is definitely a bottom, formation attempt that is happening here. I'm not sure how successful it might be, because at every rise, the index has faced resistance. So there is a possibility that it might consolidate, with some sort of positive bias on some of these stocks attempting a recovery. But I think the broad range for the index would be 54,800 on the upside and then 53,300 on the downside. So there could be some consolidation going forward. In fact, if we were to pick a handful of stocks in this space, First, let me say there are a lot of other sectors which have good momentum going for them. So if anyone's looking for a trading opportunity or an investment opportunity, sectors perhaps do make the cut. For example, real estate and financial. However, if someone is particular about investing in the FMCG space, then let me share a couple of stocks from slightly different perspectives. First, the stocks that have actually been doing well, and we expect them to continue to do well. So in that category, you've got Colgate, Tata Consumer. If you see, these stocks have really bucked the trend that the entire FMCG has seen, and we do believe that this is very likely. So the stocks that have been momentum and will continue to do well, Colgate, Palmolive, and Tata Consumer. Now, on the other hand, there are these stocks which are attempting a recovery, and what we find interesting from that space are again two stocks. Rajesh has already discussed ITC, so I won't mention too much on that. But that is a stock which is on the revival path. There is a very clear bottom formation in place, and although the momentum is missing, but then there is surely a good risk reward ratio that is to be found in ITC. Set up in Marico. Other than this, maybe one Varun beverages as Rajesh mentioned, but other than this, we don't like too many candidates in this space, so we'll stick to some of these names that we've discussed.
Thank you, Rajesh. Thank you, Kush, for your extensive knowledge and idea about the FMCG space. Moving on, let's slip into a short break now, and post that we'll address the viewer queries post the break.
Welcome back. You're watching Buy Now Sell On ET Now, show where we get your answers for all of your stock-related queries. Remember, viewers, you can connect to us on the number that's flashing on your screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well. If you're already invested in the stock, mention the buy price, the quantity, as well as the time horizon that you intend to hold on to that counter. In that way, we will be able to guide your query to our experts much better. And talking about our experts today, we have Kush Bohra as well as Rajesh Agarwal joining us on the show. Once again, good morning to you, Kush and Rajesh. Thank you so much for joining us. And let me start taking all of the stock-related queries that are poured in. This one is coming from Manoj, who's writing to us from Qatar. And he wants to know if it's right time to invest 1 lakh rupee in Suzlon at current price. He's willing to wait for 1 year. What's your take, Kush? You think that of lump sum amount investment in Suzlon for a period of 1 year makes sense? No doubt, over the last 1 to 2 years, people have made good money in Suzlon. So I'm sure that they're tempted to make some more money in it. But do you think it's advisable? They will be able to actually kind of replicate the performance going ahead as well?
Cheryl, let me answer this, on two fronts. One, on the stock performance itself. There has been, a bit of a profit booking more that we've seen on the stock. There is an attempt at revival, but, nothing too significant. So there's a possibility that the stock could move higher to 47 and perhaps in those 50 levels, but not so gung-ho on the stock after kind of stellar rally that we've seen, in the last year and a half. That was the first part. Second part is that I don't know the portfolio size, but I'm assuming if that's the entire amount that they want to invest, one, it's never a good idea to have such a high concentration risk, and two, not to invest, such a amount lump sum. So always, if you do want to invest, do it in a staggered manner, whether the stock goes up or down if you're confident. So do it in a staggered manner. That would be my advice. But Suzlon is not a stock that I would perhaps park, a part of my capital in.
The next query is coming in from Mumbai, and she has a query on Nelco. She wants to know the technical view. Should she buy at the current levels Nelco? Kush?
Sure. So here the stock too, if you see, it's been consolidating in that 700 to about 800 kind of a band. I know it's a slightly broad range, but there isn't too much suggesting that there is going to be an imminent breakout. But that said, there is a strong formation close to those 700 levels. So perhaps any dip to those levels could be a good idea to accumulate the stock. So buy on dips would be my strategy here. If the view is anywhere from 3 to 6 months, there's a possibility that the stock could reach the upper band of 800 to 850. So buy on dips is what I would suggest on Nelco.
Rajesh, how is Nelco looking fundamentally? Is the current price, the valuation is not looking that expensive at current levels? How do you look at Nelco?
See, one can accumulate the stock for a longer term horizon. I don't think anything would happen in the very short term because it has already run up quite a lot in the recent past. But still, for a longer term horizon, kindly, that the product profile they have, it caters to the defense systems. I think one can go long in this stock, but one should have a time horizon of maybe 12 to 18 months.
All right, let me take this next query then. This one is coming from Nagesh Kumar. He's not written his name. He wants to know whether it makes sense to go ahead and look at Midhani or in Bharat Dynamics at current price. So take Rajesh, do you think that these counters still offer good fundamental value or risk reward ratio going ahead, given the fact that we've already seen it rise so much? No doubt the correction have also creeped in when you talk about these defense counters, but what's your take on them over the longer term?
See, longer term looks good because of the kind of defense allocation by Indian government, their focus on making India things on PLI and all those things. The entire defense sector looks good. And they are even getting orders from international source. For example, day before yesterday, Cochin Shipyard got some order from American car. So these things are good for them, but the valuations are stretched at this point of time. I think Midhani is trading at a PE in almost 3-digit PE, I would say. So the one needs to be very choosy among these stocks. I don't think about Midhani should be bought at these levels. Maybe 380, 370 would be a better level to enter in. BL, Cochin Shipyard, Hindustan Aeronautics. These are some of the companies one should focus on. Even Bharat Electronics.
Queries from Soma Shekhar from Hyderabad. Now he has around 47 shares of Keynes bought at a price of 2,600. Mr. Rajesh, he wants to know, can he hold the stock for long term or should he exit now?
One should try to book profit. I think for long-term horizon, there are better opportunities in the market. The valuation has become quite stretched after the recent run-up. I think one should try to book profit around 2,500 levels. That's a good place to book out profit. Maybe you can choose to better names. For example, Reliance is giving good value, or even HDFC Bank. They give good valuation comfort if one is thinking of holding for a period of 12 to 18 months or even longer.
All right, this next query that I have is coming from Kush, is from Vivek, and he wants to know about JBM Auto. He's purchased it at levels of 1,000 rupees per share. He wants to know what should he do. What should he do? He's intending to accumulate some more of the counter. Does it make sense? Right strategy for JBM Auto?
Well, here there's a definite tailwind that is there because of the sector, and you see a lot of firms in this space doing rather well. Unfortunately, for now, this hasn't really been able to participate. So my suggestion would be to just wait and watch for some time. There could be a chance the stock could slip below the 1680 mark, which is a strong support zone, and if it happens, then we're looking at slightly deeper levels. But for now, my suggestion would be to hold on. If the stock does attempt a revival, and it's not too far, the initial resistance is actually at 1810, which is about 30 rupees from here. So a closing above the 1830 mark would sort of confirm that a near-term base is in place and the stock is above the 20-day moving average. That's when I will start buying. So definitely a candidate to keep radar, but accumulation should start above the 1810 mark.
The next query is from Mr. Raghavendra Rao from Hyderabad. Now, he is also holding around 100 shares of Olecta Green, bought at a price of 587 for the past 1 year. Rajesh, should he continue to hold this counter or book profit? Any other stock that you would advise for long term?
See, it's a good EV story of making buses and all, getting good orders from various state governments. But again, the valuations are overstretched, I would say. Trading at a high P, I think it's time one should book some profit into this. If not, the full shares to be uploaded, but still a partial profit booking would be advised. And if somebody is looking for a longer term horizon, the EV space only, I think Soma Comstar is a better bet. Or if you want to go for a large cap names, maybe a Reliance or a HDFC Bank.
Okay, this one is coming in from Srinidhi, who's writing to us from Bangalore, has 50 shares of HDFC Bank. Is it the right time to invest in HDFC Bank right now? What's your take coming in on this, Rajesh? Any time is good time to invest in HDFC Bank, you think, given the fact that this one has been a laggard, no doubt try to make a comeback. Hopefully this comeback sustains.
See, you said right, for a longer term horizon, any time is good. time to invest. Don't try to time the market. But as far as HDFC Bank is concerned, it has not performed anything from the time HDFC was merged into this. The numbers where there was pressure on the NIMs and those things were there. But bank which is going to report around 80,000 odd crores of profit from the next year onwards, one of the largest bank in the world. I think just share focus on a 0.1 basis or 10 basis point of NIMs madness. I think one should go in the stock. Our target for maybe next 1 year is 1,800 odd rupees. Maybe in the longer term horizon, we might again reconsider our targets. But at this point of time, we have a target of at least 1,800 in the next 1 year.
Next question from Mr. Mahesh Krishnan, and he wants to know, Kush, whether Vinati Organics share prices will touch the 2000 level anytime soon. Current market price is around 1,500 rupees, and he hasn't mentioned how many shares he has, but that's his query currently.
Well, it could be a bit of a stretch to give a 2,000 rupee kind of a target on Vinati Organics. Almost the last entire year, the stock's been under pressure, and even now there is no let off. Any kind of bounce that you're seeing on this one is more of a dead cat bounce, where from old territories, there is some bounce emerges, but then any rises, a further opportunity to sell. So if they do hold this one, my suggestion would be to it, this one. As I said, there isn't a meaningful bounce over the last year or so. So very difficult, for Vinati Organics to touch 2,000, given the current setup.
Right, the next one is coming in from V. Lee, who's writing to us from Bangalore. And for you, Rajesh, he wants to buy Dixon Tech at current market price for a period of just 1 year. And also wants to know whether DB Corp, considering the election season, reasonable P, should he look at that one, or should he look at CCL products, given the fact that this one is expanding in Vietnam? So what is your take on, first, Dixon Tech makes sense for even for a shorter period of time to invest in the counter now, or DB Corp, or CCL products on the fundamentals?
First, come to Dixon Tech. It's doing well. It's got good tie-ups with a lot of consumer good makers, and the PLI scheme, the Make in India scheme is doing well for the company. But I think the valuations are on a very high side. So one should wait for new entry. Maybe 7,000, 6,800 levels would be a good levels to enter at this point of time. And as far as DB Corp is concerned, I think yes, the election season is good for companies like DB Corp, and one can expect some 15-20% upside from in the counter in the next 6 to 9 months. These are the two picks out of the three which I can recommend at this point of time.
Well, the next query is from Alok Mangla from Delhi. Now, he has around 10,000 shares of Nalco bought at a price of 175, 10,000 shares of SAIL bought at a price of 127. On both these stocks, currently he's getting a profit. For short term, he wants to know, Kush, is there any upside in both these counters?
Certainly looks so, because if you see, both these stocks have given a fresh breakout over the last, couple of sessions. So again, as I have suggested time and again, first, congratulations on the profit, and the idea here would be to, enjoy this profit and ride the momentum. So Nalco, what I would suggest is have a trailing stop loss anywhere from 174 to 177 range, where there is a strong profit. This momentum could take the stock higher, even to the 192 and 198 kind of levels. So Nalco, continue to hold, ride with a trailing stop loss. Similar for SAIL, however, the momentum is slightly lesser than Nalco than two. Today we've seen a breakout above that 150 level, and that is really a very positive sign. So here too, I would have my trailing stop loss at about 158 and continue to ride this for levels of 157 and 162.
Coming back to you, this one is coming from Shashwat, who's writing to us from Delhi. He wants to know about Biocon and Wipro. These stocks have not moved as per the rally that has been witnessed by these sectors. He wants to invest in both the stocks, but he wants to know what sort of target, stop loss, or entry level should he keep in mind? Kush, for you.
Sure. Avoid. My suggestion is to avoid both these stocks. He's rightly pointed out that both these stocks have actually been underperformers. We were bullish on Wipro for a while, but that rally too has fizzled out. My suggestion would be to not consider either Wipro or Biocon for that matter. Something that we do in this space, Spark is one stock that he can consider, Pharma Advanced Research, and as far as IT goes, maybe a KPIT Tech. So these are some of the replacements in these particular sectors, but Wipro and Biocon, my suggestion would be to hold up, not buy at least for now. The setup doesn't really encourage fresh investment.
Well, thank you, Kush, for that. With that, let's slip into a short break and we'll address more of your queries post that.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries then. And this one is coming from Rajesh Pai. And he's bought Hindustan Copper at 312 rupees per share. He's saying that today's rally has been great. But what will be the outlook for the next 1 year? Kush, what are the charts indicating for Hindustan Copper? Already seeing good rally also, but let's not forget it's commodity based.
Oh, absolutely. And that is why the sustainability of the rally is a little dicey. Then too, this is one stock which has actually quite defied, how the other metal stocks have performed, but you can't ignore the volatility. There is a bright chance that the stock can cross 100 over the next, 12 months. So I think about 400 to 15 is the zones that we're looking at. The only thing is that, with the current rally, the stock is actually entered the overbought territories, across time frames. There could be some profit booking also coming around, but any kind of dips that turn out to be a buying opportunity. So this is a stock where you should have your risk management in place, especially if you've got a big-ish kind of quantity. But I would continue to hold this with a trailing stop loss. My 12-month target here would be about 410.
Is coming in from Neelam from Jaipur, and it's for you, Kush. She's saying that she is making a profit of around 11% on CAMS. Should she book this profit or hold this count? Also, she wants to know whether does it make sense to buy stocks like Sumit Woods, Lumax Auto, Blue Star, or HEG? Are you seeing any 15-20% potential upside over the next 3 to 4 months in any of these counters?
So, look, I'm assuming because this query is directed to me, the view here is, near term to medium term. So CAMS, however, we are bullish from, a longish term perspective, anywhere from 6 months and above, for sure, we are bullish. But we are seeing pressures, near term. There is a negative divergence that we are seeing, and, that is reflected in the stock prices. So not a bad idea to perhaps, book profits as well, especially since she is sitting on an 11% profit on this one. So CAMS could see near-term pressure. So perhaps the book profit is a good idea. Now, as far as the other names go, we have a quite active track on Lumax. I think I've suggested this stock, a couple of times on your show as well. And, as a disclaimer, we've suggested this to our advisory clients also. So Lumax Auto, we think, has a potential to go to 525, even 575 kind of zones in the next 12 to 18 months. We're fairly bullish on that. So if she does want to switch, let's say from a CAMS, then Lumax Auto is something that I have on my radar. Blue Star also is doing well, but I think this is more a seasonality factor. So I would be a little wary of this value.
A lot of actually short-term related queries coming in. Let me take this one to you, Rajesh, from Neeraj Verma, who's writing to us from Assam. He has 400 shares of Tata Services at an average price of 100 rupees per share and 25 shares of Nestle at an average price of 2450 rupees per share. What sort of an outlook are you witnessing for both of them? Tata Services, do you think it makes sense to stay put with this one? No doubt this one had a sharp rise. Last year, everyone was astonished with the rise also that Tata Tele had actually posted. But what's your take coming in on both of these counters now?
Please avoid from us the kind of run-up it has seen in the recent past was not warranted because of the numbers, I think so. The fundamentals are in a poor state at this point of time, and one should try to book losses, I would say, and get out of this. And the other one you said was?
2450.
Nestle, right?
Yes.
Nestle can be held for a long term, as we discussed in our opening segment about the FMCG sector. It's one of the companies which is doing very well, and the kind of fall in input prices witnessed in this, I think this company can go to 2,800 odd rupees if the numbers are good in the next 2-3 quarters as we are expecting. So with a target of 2,800, one should stay put with Nestle.
Well, the next query is from Lancy from Chennai. Now she's holding 500 shares of Patel Engineering, bought at a price of 54. She wants to know whether should she continue to hold this counter or sell. Rajesh, do you have a coverage on this stock, Patel Engineering?
See, Patel Engineering wants to continue to hold the kind of traction we are witnessing in the entire engineering space bodes well for the stock. Maybe target of 75 or 80 rupees in the next 1 year is quite possible. One should continue to hold.
All right. This one is coming in from KV Reddy, who's writing to us from Bangalore. IDFC Limited to 1,200 shares at a price of 89 rupees per share. Wants to know whether he should hold or look to add some more at these levels. What's your take coming in on this one, Kush? IDFC Limited?
Well, don't look at some more. There will be pressures coming onto this, stock from let's say those 124 to about 120 kind of zones. So the risk reward ratio for any kind of fresh allocation, will not be justified here. But since he's been holding it for a while now at lower levels, continue to hold the stocks. Only recently crossed 200-day moving average and is attempting to sustain above that. So not a bad idea to continue to hold. However, keep your stop loss at those 115 levels. If that breaks, and the stock could perhaps slip a little lower. So don't add fresh. Hold the existing position with a trailing stop loss of 1.
Next query is from Satya and it's for you, Rajesh. He's asking your view on HG Infra and JSW Infra. He's currently making a profit of 30% on both the counters and can continue to hold both these counters for 1 to 2 years. So should he book profit or should he continue to hold both these counters?
See, one should continue to hold both of them, I would say. We are more bullish on JSW Infra as such because it's one of the largest port players. And the kind of traction we are seeing in the entire port business, the logistics, they're acquiring new companies, new ports. I think this company is highly undervalued despite the fact that after the IPO, it has run up quite a lot, but still we think that it can go to much higher levels from this. So any dips in HW Infra should be taken as an opportunity to add. As far as HG Infra is concerned, considering the order book and all, I think one should continue to hold.
Okay, this one is from a first-time viewer, or rather first-time viewer who's written to us for the first time, I beg your pardon. It's from S.D. Nair, who's writing to us from Kalyan. 100 shares of JB Chemicals at a rate of 180 rupees per share. He wants to know what's the prospects of the company going ahead. Rajesh, what's your take coming in on JB Chemicals? A lot of news floating around this one as well. Do you think it's a bet that one should stay put with? He's bought at 180 rupees per share. I'm unsure it is the buy price though.
Congratulations if you have bought at 180 and still holding it. This is what long-term investment does for good companies. And as far as JB Chemical is concerned, yes, of course, one should continue to hold the number in pressure when in the recent past, but now the things have started moving. They have come out of that Russian venture also. That's a big positive for the company. I think considering the balance sheet, the product profile, etc., this company, one should hold this stock. And if for any reason whatsoever it comes to around 1600 odd levels, one can even add.
Well, the next query is from Subrata Mukherjee from Kolkata, and he wants to buy RCF for short term. Does RCF look good on charts for short term?
Well, there is a recovery underway, and there isn't really a point here which says that there could be any kind of a pressure here. We are seeing the momentum indicators also pick up, so it does check a few boxes. The only one that perhaps would have sealed the deal for me is the volumes. On these higher levels, the volumes have perhaps thinned a little, but other than that, there is this momentum that's intact. So on the whole, my suggestion would be to if they want to initiate a fresh buy, then the setup's quite nice, but have your allocation a little less. The ticket size here should be a little smaller than average trade. From that that said, the stop loss this trade should come in at 143, and on the upside we're looking at 153, and once that is taken out, perhaps even 150 kind of levels. As I said, could have been higher to seal the deal, but nevertheless there is this momentum in the stock which is carrying the stock higher.
All right, that's RCF for you, but there's definitely one stock that has always been in focus of a lot of our viewers, and that's definitely Vodafone Idea. And Soumya, I believe from sources you've learned that Vodafone Idea is trying to hard sell its FPO to a slew of investors, isn't it?
Well, yes, around 250 hedge funds they are meeting, and and they are planning to raise close to 20,000 crore rupees, and the company aims to aims to close this fundraise by the end of first of FY25, that is in the next 83 days. So this is what the company is basically communicating to the prospective investors now. Now they say that they aim to increase their revenue to around 75,000 crore rupees by FY26 from 42,000 crore. That is the current run rate that we are looking at now. Because of this rise in revenue, their cash EBITDA is also expected to increase around 13 to 14,000 odd crore versus the 8,000 crore run rate that we have been looking at. Now, what will be the factors that will aid this kind of a revenue growth for Vodafone Idea over the next couple of years? Firstly, they are aiming to add close to 1.5 crore net new subscribers every year. Now, in the last 4 years, if you see, the company has lost more than 8 crore subscribers, and over the next couple of years, they are expecting to add close to 3 crore in total. Now, they also say that they have stopped losing customers at this moment, and going forward, they are also expecting a tariff hike of close to 20 to 25% post the election period. Also, they are saying that there would be another round of tariff hike in FY26 as well, and all the players, that is Bharti Airtel, Reliance Jio and Vodafone Idea, will take this tariff hike going forward. So these are the two most important factors. The third factor is that they are expecting that 2G customers to migrate to 4G, which will eventually lead to higher ARPUs and higher revenues for the company. And do remember that Vodafone Idea currently, if you see, has close to 9 crore 2G subscribers. So these 2G subscribers could move to 4G or eventually to 5G going forward. Now, how are they planning to use this funds? They are planning to use whatever the fundraise that they will do for expenditure purpose. Now, do remember that Vodafone Idea's capex is much behind of that of Bharti Airtel and Reliance Jio. Hence, the company has not been able to start 5G, and they are planning a capex of nearly 55,000 crore rupees over the next 3 years, of which 45% will be used by the company towards 5G. What more, going forward, they're also expecting a reduction of around 35,000 crore rupees of debt, and this is toward the government dues of Asia, because they're expecting the Supreme Court to approve the resubmitted appeal when it comes to calculate the AGR dues, because of which their debt will be lower by around 35,000 rupees. So these are broadly the pointers that they're giving to the prospective investors for the fundraise. So it will be interesting to see whether actually a fundraise goes ahead or not this time, because you remember that the company has been looking to raise funds for now for more than 4 years.
Absolutely, very crucial to watch out for, and they're planning to complete it in 83 days is what sources are saying. So let's wait and watch out for that. Vodafone Idea stock is doing absolutely nothing in trade today. It's trading unchanged, tried to make that recovery but didn't happen. But on that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, apart from Vodafone, we'll talk about more stocks and discuss your queries. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of our stock-related queries. No doubt before the break, we did speak about Vodafone Idea and what the company is planning to do with respect to its fundraise, and what sources of Somit is the fact that they are aiming to complete that fundraise in 83 days by the end of Q1 FY25. But the stock now is actually doing absolutely nothing in today's trading session, trading flat. But let's move on, taking stock related queries then, and this one is coming in from Achar, who's writing to us from Madurai. And Kush, this is a query for you. He's planning to invest a huge lump sum amount, and by huge lump sum I mean about 75 lakhs is what he's written to us, in a very short term swing trading. He wants to know whether he should buy Cochin Shipyard or any other stock.
Well, as I just discussed, a while back, it's not a good idea to park a lump sum amount in a particular stock. But again, to each their own. As far as Cochin Shipyard goes, see, the stocks actually run up quite a bit, entered oversold territory, and is seeing some sort of profit booking at least today. While the overall view on this stock remains positive, the stock could very well touch 1200 levels and higher going forward. Perhaps the stock could also some sort of consolidation with a positive bias. Now, that's on Cochin Shipyard. Again, very short term, it becomes a little difficult. A couple of stocks that we've time and again discussed. One is Spark, Sun Pharma Advanced Research. The other is Geo Financial Services. These are a couple of stocks that we have suggested to our clients as well. And if he does want to invest, then my suggestion would be to perhaps even consider some of these names.
Well, the next query is coming in from Susil Kumar from Chi, and it's for you, Rajesh. He wants to know whether should he continue, should he expect the share prices of Jio Finance to come down below the 350 levels to enter the stock, or should he buy it at this price only? And second query is on Tata Steel. He has bought at 137 rupees per share. What should he do now? Should he book profit or wait for higher levels? For long, he can continue to hold both these counters. Rajesh, what is your view?
For long term, it's a buy on both of the counters from our side. And it's very difficult to predict whether Jio would come to 350 or not. So you would be waiting for 20 rupees downside, and again it would move to some higher levels, and from there you will be waiting for 70 odd levels. It's rather prudent to invest rather than to wait for correction. I think in the counters, if you're planning for a longer term horizon, Jio, of course, it's on our buy list from a very long period of time. We have discussed so many times with you also. And we feel that if somebody holds Jio Finance for next 3 to 4 years at least, a very good upside can be expected from this. So I would say buy both of them and stay put for at least 12 to 18 months, if not longer.
Right. We spoke about Nestle. We did speak about the FMCG pack, Rajesh, but talking about consumption pack, Sundar wants to know whether he can look to buy consigned Nerolac right now in the longer term. Do you think this one is a good fit if you want to play the paint sector, given the fact that the competition in the paint sector is only going to increase?
You said it right. Paint sector is going to heat up in the near future by Grasim coming into the foray, and the larger players like Asian Paints and Berger still like to maintain their market share. It would be something to watch out for. Not to forget, the crude has been inching very slowly, but it's inching above. It's above 91 at this point of time, and these are bad news for companies like Paint. So I would say if somebody is looking for entering into paint sector, why not enter into Grasim, which is not only into paint but which holds. It's a holding company for Ultratech, due to which you even can place cement, and their chemical business is also doing well. I think Grasim would be a better pay than consign Nerolac.
Next query is from Padma Kumar Ji from Mysore, and he's holding 30 shares of Shobha, bought at a price of 546.8 rupees. Kush, can you give him a short-term target on the stock? Do you expect some more upside?
Shobha, and you said the price is somewhere in the range of 500, is it?
45, I guess. Yeah, 564. Sorry.
564. Okay, wow. So quite a bit of profit on this one already. The entire sector is doing well, and there's no reason for Shobha also not to do a catch-up play here. So today we've seen the stock come off the highs from those 1685, 1700 odd levels. And there's every possibility that the stock could perhaps go to those 1700 levels. And once that is taken out, we're looking at 1765 also. So from a near-term perspective, 1765 is the level that we're looking at, and on the downside, support comes in incidentally at 1575.
All right. This one is coming from Akshay. Wants to know a medium-term view on SRF Kush. He is already holding from a level of 25-50 rupees per share. Should he accumulate some more of SRF in his portfolio?
Well, the stock's on the rise. If you look at the weekly setup, it's quite encouraging. SRF, one stock which has been a wealth creator over a while, so not a bad idea to accumulate at these current levels also. For me, any kind of dip towards 25-50 will also actually be a good entry point. So from 25-50 to the current range, the stock can be bought. On the upside, we're looking at 27.45 as the first hurdle, and once that is taken out, 29.50. So this is zone for accumulating SRF. 2900, 2950 being the second target in the medium term.
All right, with that, let's kickstart with the rapid fire then. And the first one is also coming your way. Kush Bohra Founder is the counter. Amit wants to know, should he look to buy right now for a period of 6 months?
He can. Here the stop loss would be 212 and the targets would be 225 and 232.
And the next query is from Gautam from Mumbai. Among Tata Steel, SAIL, Vedanta, what will be a better pick, Rajesh?
Tata Steel.
All right, Dr. Zeenath wants to know about Tata Steel. The buy price is 153 rupees per share. Kush, what sort of a target can she have for the medium term?
Continue to hold. The first target here is 175, and the second level that we're looking at is 182. Support zone is at 164.
The next query is from Lakshmi from Hyderabad. Now she wants to invest in 2 stocks, Cochin Shipyard or Dock or GR Infra or NCC. Rajesh, 2 stocks from these 4.
Cochin Shipyard and Majgaon Dock.
All right, you Anu who has 2,000 shares of Shalimar Paints. For you, Kush, 178 is the buy price. What to do in the short term?
Book profit, exit out of this. There is a lot of pressure on the stock. Perhaps an exit is a good idea.
The next query is from Deepak Dave, senior citizen from Gandhinagar. He's a long-term investor, has 2,700 shares of Motherson Sumi, bought at a price of 55. Should he add, hold or exit, Rajesh?
Hold. It's a hold from our side.
All right, Kush, first source, Jayakant wants to know, good bet right now at current levels?
It is. Here the stop loss that we're looking at is 198, and on the upside, stock has a potential to go to 212 and 220 levels.
The next query is from Suresh Babu from Hyderabad, holding 30 shares of Info at a price of 3,500. Should he continue to hold this counter or exit, Rajesh?
Exit.
Kush, Swati wants to know, wants to invest huge money in pharma sector, Shilpa Medicare, Sun Pharma, Gland Pharma. Do you think they make sense to invest right now?
Shilpa Medicare is perhaps one stock she can consider, but as I said, an alternative is Sun Pharma Advanced Research.
The next query is from Krishna from Bangalore, and he wants to know whether is it a right time to enter JK Paper for 3 to 6 months. Kush, what is your view here?
I would say avoid.
All right, with that we come to the end of the rapid fire as well as query segment. Thank you so much, Kush, as well as Rajesh, for joining us on the show, as well as solving all of your queries, talking about the FMCG sector as a whole. There's a programming note for all of our viewers who are tuned in. Shattering the Glass is not an easy feat for all the women out there, but ET now has something that can help them face this challenge and move a step forward. We bring to you Buy Now, Sell Now Women's Special. This programming note is for the women who watch the show and anybody who's looking to share investment strategies with their colleagues, wives, daughters, or anyone who they can think of, with a sharp focus on women's investment goals and ACE experts who also happen to be women. Mark your calendars for the 2nd and the 4th Wednesday of every month that we will have this special women's special here, a masterclass on how to invest better and be financially secure for all the women out there. So yes, the first episode will be tomorrow itself. So here's a quick programming note for all of our viewers. But with that, we are totally out of time with this edition of Buy Now, Sell Now. It's a goodbye from Samit, myself, and the team that put the show together.